Do you think that valuations are now decent? If anybody had missed out on the earlier rally or around the 8,000, 8,500 mark, can start to invest a little bit of money back in the markets?
Well, couple of things which I need to say based on your question. One, of course, is that we are a part of the rally which we are seeing globally. And I think overall markets have, they are breathing a sigh of relief. So in a sense, I think overall we are also sailing along with that. That is one way of looking at things. Second, of course, as far as the valuations are concerned, as we always say that in the short term it is very treacherous, but in the long run I think overall macro fundamentals are just getting in place for us to have a long-term bull market. But all what I'm trying to say is that in the short run, maybe next 1 month or so, we should still be very careful, because I think what has happened in the past 10 days probably can repeat, or some of it can be possible. Not that I'm saying that it will happen, but since we do not know the exact nature or the cause of what has happened, except for the fact that China is a problem, but what caused the problem, how has that got rectified, I think nobody has an answer to that, and we are still groping in the dark as far as China is concerned. So that would still be the worry at the top of my mind as we move into the next 15 days or a month.
Right, but do you think the problems of China are bigger than what essentially the markets have as of now sensed, or it can get bigger than what essentially it is? Is that a big worry for asset classes across the globe?
So what had really happened was, when Greece was a problem, it was an overwhelming problem. But we all knew all the contours of the problem. We all knew the parameters of the problem. We all knew the depth of the problem. We all knew the position and the stance of various parties in the problem. But China is something where things are just coming out without anybody getting a hang of it, or without anybody getting a sense of it. So in that sense, it is very difficult to say whether everything has been played out, or whether it is blown out of proportion, or still it's still going to continue or simmer for some time. My own guess is that it will still simmer for some time without knowing the exact proportions of that simmering. So, so that's what I said, that maybe going forward we should be a little more careful in the next fortnight or a month.
Right, but after the correction, what's the what's a good level that you would look at, or what's essentially some names that you would look at these levels?
Sure, I think if, as and when this, after a fortnight or a month, whenever I think the market really settles down and becomes a little more stable, I think it would still be the financial sector which we would be eyeing at, because I think that is where the biggest delta has to come. And it would still be, of course, a mixture of private sector banks and PSUs both put together. And of course, it will still be the pharmaceuticals, which probably still has a good steam left as far as the bottom line growth is concerned, because I think some of the top pharma companies can still notch up almost about 20% CAGR in the bottom line over next 2 to 3 years, having a good ROEs and good cash flows. So I think some of the names like Sun Pharma, Lupin, or slightly in the mid-cap, something like a Jubilant Life Science. So some of these names can really stand out. And of course the IT pack, which probably will have a lot of tailwind in terms of the currency depreciation.
Right. Let's first start with the financial names that you said, because that's the space where we've seen a meaningful correction coming in. In that financial pack, how would you go with? I mean, there is one basket which is very expensive. So names like HDFC, names like Yes Bank, names like Axis, all of them are very expensive in terms of valuation. And the second pack is the PSU names. Even the larger ones are not that expensive. How would you look into this space? Where would you advise to put money right now? Among the large cap PSU or the large cap private sector names?
So, in this particular carnage which happened, I think all private sector as well as public sector, both were really, they got battered very badly. So as and when the revival or as and when the recovery takes place, we always know that it's always the front line which really moves ahead of the other stocks. So in that sense, I think the private names will still rank top on the priority, whether it is HDFC Bank or whether it is IndusInd Bank or say it's an Axis Bank. But maybe in the PSUs, I would still look at some of the frontline PSU banks, for example, SBI, BOB, Union Bank, some of those names also as a part. So it will be a combination of that, something which provides resilience to the portfolio and something where the risk return also is in favor. So those would be the PSU banks.
How would you, go ahead and look at the pharma space? Because as you took some names like Lupin, names like Sun Pharma, maybe even a Jubilant from the Midcap pack. Ex a Jubilant, the names that you mentioned, all of them are expensive in terms of valuation. Don't you think that very high returns from here on from these names could be quite difficult unless the numbers are like really blockbuster?
Sure, I think, of course, you always run the risk of the numbers not meeting the expectations. And in a few cases, some of the quarterly numbers, 1 or 2 quarters, they have really shown a good disappointment, whether it is Sun Pharma or Lupin or any of these names. But I think slightly on a longer term basis, notwithstanding 1 or 2 quarter aberrations that we are talking about, I think some of these names still have a good potential in terms of showing a good growth. So I did say Sun Pharma, I did say Lupin. I think, yes, there could be some disappointments, but slightly in the longer term, we are all talking about in the longer term, I think they can still give a very handsome return. Even Cipla is another stock which can give a reasonably very good returns in the long run. So I think I'm still looking at some of these packs. As what I said, my approach is something which gives a resilience also and something which can provide a reasonable delta to the portfolio.
Right. How would you go ahead and look at the metals pack? I mean, is there any interest in that name, or everybody has just written off that name, and that's when valuation starts to really look very attractive? Large cap metal names, Tata Steel, Hindalco, all of them have significant legacy behind them. Valuations over there, people have just written off that sector. Do you think a little bit of money should be put in over there, or you would still wait and watch?
So, commodities you always take a temporary momentum bet on some of these commodities, which is what I've always been maintaining. But I don't think this is the right time to look into the commodities, because on a secular long-term basis, they still don't inspire confidence. And given a combination of circumstances which exist today, that international currencies have all been routed so badly, commodity prices are coming down. So, all in all, these commodities have really collapsed like a pack of cards in terms of the landed price as far as India is concerned. So, they continue to pose a very formidable challenge to all the Indian companies. So, in that sense, I do agree that the valuations have really come down very significantly. But still, I don't think it's time to play a contrarian bet on some of these. Maybe there will be times when you can sense some short-term momentum. Maybe you can take a bet on that. But still, on a long-term basis, I think there are still better stocks and the safer stocks to play.
Something like a Ashok Leyland, a Tata Motors, do you like that because of the MHCV story? Of course, Tata Motors you have been liking for a while, but it's a name which has not done that well. At about 300, 350 odd levels, are you convinced from here on in Tata Motors money can be made?
Well, I think Tata Motors, we were recommending around 380 to 400, but it has come down in this carnage quite a bit. So, at these levels, of course, it's available at a 52-week low, and I think we can very safely assume that we are at the bottom of the cycle as far as the medium and heavy commercial vehicles are concerned, but that's a very small portion of the overall Tata Motors portfolio. The larger portion is still dictated by JLR, whether it's Range Rover or Jaguar. So I think that is what is really causing some kind of anxiety, and which is what is reflected in the prices, given what is happening in China, the way yuan is behaving. So I think all this is creating some kind of apprehension. But having said that, even from the current levels, notwithstanding what's going to happen in next 1 or 2 quarters, I think the longer term Tata Motors still looks pretty attractive from all point of view on a risk return basis, on a return ratio basis. I think it still holds a very good promise, and I think that's a stock one should buy from the current levels.
Right. What would be your view on Ashok Leyland in terms of MHCV, the market share that they've gained, the new launches, they have repaired the balance sheet quite a bit. Is that a name that interests you?
Sure, I think from the current levels, the way Ashok Leyland also has corrected from the top, and it's a pure medium and heavy commercial play, and the region in which they are operating, they have been really able to garner a good market share. And more important, I think the top management probably seems to be very much focused in Ashok Leyland on trying to improve the sales as well as drive the cost down. So both is a very potent combination, and I think even the volume numbers which they are churning out every month, that doesn't seem to be really abating at the moment. So that also gives the confidence. Yes, I think Ashok Leyland does merit a look from the current level.
Right. From the cement pack or the industrial pack, anything that you like? If you know, you at Prabhudas Lilladher, you all generally tend to meet a lot of mid-cap companies. You tend to find a lot of mid-cap companies. Anything new and interesting on the industrial side? Because that's a space which has seen some good cuts coming in. Anything you like after the recent carnage in the mid-cap sector?
So, well, if you're talking about the general mid-cap, or are you talking about the industrial, the capital goods segment?
The industrial space more probably, you know, names like road, names like maybe railways or defense, anything that you like, because that is one space which has seen a lot of correction. It's still not a very over-owned name, over-owned sector. Anything that you like over there?
So I think in the mid-cap space, something like an Escort really looks pretty interesting from the current levels. It still has enough steam to really go to new heights. And that's a stock where they have, you know, that's a company where they have done a good amount of cost cutting. And even the tractor volumes, which had really come off, I think that probably is gradually going to recover. So that's a stock which can do pretty well in the long run. I think apart from that, you have something, a name like Rallis India or a Sharda Cropchem. All of them, they really look pretty interesting from the current levels. And some of the mid-cap IT space also does merit a look.
Right, but overall the outperformance of the mid-cap space, you think it will continue because of the sort of flows that we are seeing among the domestic mutual funds?
So I think in the short run, the mid-caps have really taken it on the chin, and probably having taken it on the chin, probably it always lags behind the curve, and I think it will always lag behind the front lines, of course. So in the next 2 to 3 years, yes, there's a good money to be made in this select mid caps, but in the short run, it continues to be a little more kind of treacherous, to use a very strong word. So one has to be a little more careful on these.
Right. Any other names like Motherson Sumi or anything that you like? I remember you talking about Britannia, Motherson Sumi, Imami as you know, some of your top picks. All of them, in fact, quite a bit of them are slightly off the highs in this recent correction.
So I think amongst the pack at the moment, I think both Motherson Sumi and Britannia certainly looks pretty good. There is every case for Motherson Sumi also, in spite and despite whatever is happening internationally, they acquitted themselves pretty well in the acquisitions, and the way they have really handled the performance. So that gives a lot of confidence. So even from the current level, I think Motherson Sumi is always a must as a part of your core portfolio, is what we very broadly think. And I think as far as Britannia is concerned, it's both. Your raw material cost has really come down. The company is absolutely managing things very efficiently, and I think the top line growth continues to be pretty good. So all in all, a good three very good combinations in favor of the company. So I think Britannia also looks pretty interesting from the current levels. Still there is 30 to 35% appreciation possible over next 12 to 15 months.
Just a last word on the oil marketing company. There has been a significant change over there in the numbers that they deliver in the last 12 to 18 months. You think they can gain on from here on, or broadly positives are factored in?
I think they can consolidate further. There is still possibility of performance really improving. as the oil prices stabilize. And I think more important is these companies have started generating a good amount of cash. So a lot of debts is off their books at the moment. And more important, I think they are really not at the mercy of receiving subsidies at the moment, the way the oil prices are. So the oil marketing companies like HP, BP and even IOC to a great extent, all of them really merits a look. And a slight derivative play apart from these oil marketing companies would still be companies like Castrol, where I think the base oil prices also have come down quite a bit. So that holds a lot of promise for Castrol in terms of the top line, as well as a disproportionate growth in the bottom line.
Right, Dilip Bhat, thank you so much for joining us here this afternoon. Always a pleasure talking to you. That was a view